I think we're at the juncture where we're going to start to see economic growth and inflation starting to slow. I think we're at the transition point, and that's upsetting markets as well, because they're really struggling to try and figure out, okay, what the hell is this all about? What is going on?
The crypto market has fallen drastically in the last 7 days, with Bitcoin being 50% off its all-time high, Ethereum trading at 2,300, and Solana down 38%. A potential crypto winter seems likely, and many investors are seeking answers. In a brief message, Raoul Pal has spoken candidly to his audience about his theories behind this unexpected downturn in the crypto markets, and he has given some similar examples in the past where other downturns has occurred previously, and also what to expect moving forward. Raoul believes it is possible that one of the major factors for the downturn is the unpredictable actions of the Fed. But he also considers that this is just a yearly occurrence in the crypto world. Throughout the run-up to all-time highs, Raoul has stood firm on expecting a downturn, suggested not to invest more than you can lose, and more importantly, discourage buying on leverage because the sudden crashes are becoming a common occurrence. Many investors are frustrated and some confused, and though this might not be the news many would like to hear, Raoul still believes we have more bearish action ahead of us. Nevertheless, he has offered some guidance and optimism for the future. Let's listen to what he has to say.
How I try and put this in perspective is that when you're trading a 70 volatility asset class, you're going to see 50% drawdowns yearly, maybe even 2 times a year. Really, it's been over the last 4 or 5 years, it's been every year we see one of these. It feels like that is now a normal function, and I also notice how little people are freaked out by it, which I think is a really good thing. I think people are starting to understand not using leverage, not having too much size, and understanding the long-term time horizon. So, you know, we are seeing liquidation, and a lot of this is based around the thesis that the Fed are going to tighten and therefore risk assets are going to fall. I went back and tested that hypothesis, and really when you go back and look at the 2010 period to 2016, the Fed kind of stopped QE, the balance sheet ran off for a bit, then they had to restart QE again because the economy takes a while to get traction. I think that's going to be the case this time around as well. But even when they do hike rates and even when they started tapering, generally what happens is the markets get a little unsettled at first, but then resume back to normal. Because basically, if they're tightening, it means the growth is decent. And so if growth is decent, equities do fine. And that's, I think, crypto is getting part of that whole risk cycle. So my view is that markets continue to be volatile for a bit. There's some more downside to come. If we go back and look at the NASDAQ or Amazon and stuff over that period, we would see these kind of 20% drawdowns, 15% drawdowns, and then the market explodes higher again as the central bank starts realizing that they can't raise rates as fast, and the market does, and then everything stabilizes yet again and things move forward. That's kind of my base hypothesis here. Could we have further downside? Could we be forming a head and shoulders top in the NASDAQ? Could that knock through to Bitcoin? Sure. I've said for a while now, the Bitcoin downside is probably 30,000. I think we're in the kind of buy zone. I'm certainly looking at adding ETH myself here. I'm starting to see DMARC weekly counts on Bitcoin last week, on Ethereum this week, still missing the daily 9 counts. So I like to see these technical indicators stacking over different time horizons. The daily one would come in maybe on Monday, Tuesday, something like that. So I've got my eye really focused on this. It's pretty normal. I think people are, as I said, people are getting used to this. So anyway, good luck, nothing to freak out about. Interest rate rises are almost never negative for the market. What's negative for the market is when the yield curve inverts and we hit recession. That's when markets go down and stay down for an extended period of time. We're nowhere near that yet. The yield curve is, however, starting to flatten every day, which is suggesting that the Fed can't really raise rates.
If you want to listen to the full interview, click on the link provided in the description. We would love to hear your thoughts. Do you agree with Raoul that another downturn is imminent? Comment down below. If you found this video useful, please hit the like button. It only takes 1 second, but it greatly helps the channel, and more importantly, it helps YouTube find someone similar to you who wants to stay up to date in the world of cryptocurrency. If you're new to the channel, don't forget to hit the subscribe button and bell notification. Thank you for watching Daily Dose Crypto.